Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Market rockstar NVIDIA fails to impress. Well, if you aren't by now familiar with the AI chip maker NVIDIA, you likely don't follow the financial markets very closely. NVIDIA is the stock market's equivalent of Taylor Swift, and much like the pop star's concert tickets, shares of the popular tech stock are not cheap. Now, the company reported earnings for the most recent quarterly period earlier this week, and the anticipation was nothing short of epic. In fact, there were reports of numerous watch parties taking place all over the country. Needless to say, expectations for the stock in its earnings report were pretty darn high. And despite beating the consensus estimates on both the top and bottom line, as well as guiding their revenue and earnings estimates higher for the next quarter, the shares fell by as much as 8% after hours and were trading about 5% or so lower the last time I checked. Now, this is an example of investor expectations simply going beyond the reality of a company's ability to deliver results that can live up to the hyped up mania that they have created. For this week's featured insight, what's your objective? Much like most things in life, when it comes to investing, it helps to know what your purpose is. And also, much like life, just wanting to make money, regardless of how you get there, usually doesn't lead to optimal results. In both life and investing, making money is usually a byproduct of understanding your purpose and sticking to some tried and true principles in both good times and bad. For example, in determining your asset allocation, you've probably heard that you should become more conservative as you age. But at a certain point, your objectives could shift toward providing for the next generation, or towards charitable intents, which lengthen your time horizon and therefore should increase the amount of equity exposure you have in your portfolio. Likewise, you may be young, but if you have a liquidity profile that's limited, you may want to be careful with your risk level because various cash needs that may arise quickly with certain life events, including marriage, buying a home, or having a baby, could put you in a situation where plowing too much money into the stock market and then being forced to sell into a downturn when cash needs arise could prove costly. Looking ahead, all eyes on employment. Well, after watching inflation like hawks for the past couple of years, investors seem to have turned their attention to the employment market as the most important economic indicator. A rising unemployment rate and increasing jobless claims were a big part of the stock market swoon in late July and early August. And then better data on that front helped stocks recover as we moved through the latter part of the dog days of summer. Now, markets didn't seem to care that the government overestimated job growth by more than 800,000 jobs during the past year. That's likely because it was widely anticipated that that was the case. I do, however, expect that when we get the August jobs report here next Friday, investors will want clear signs that the economy remains on solid footing. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.